morning, everybody. We are live on our first ever live Zoom call. We're going to wait just about another 30 seconds or so as I see this audience continue to build. But welcome, and we will be right with you shortly. A great program. All right, looks like we've got a full house. Good morning, everybody. I'm Jeff Pollock, your 2020 Commercial Board President. Very excited to be with you today with a very special guest and a wonderful moderator, a name that you know, Mr. Keene Miller, who is a past president of the Commercial Board and runs Ackerman & Company, a very loyal sponsor of the board and a good friend to many. So welcome, Keene. And of course, I'd also like to thank our annual sponsors and our education sponsors. Without their support, we would not be able to bring you such quality programs that we normally do. So let's get started. Let me introduce our very special guest. Time is limited. We have a hard stop at 10:30 and a lot of great content to get to. But let me tell you just a little bit about Dr. Lawrence Yun. As the chief economist and senior vice president of research at the National Association of REALTORS, Dr. Yun stays on the leading edge, forecast shifts and changes in our industry. He's active on many forecasting panels, including the Blue Chip Council, the Wall Street Journal Forecasting Survey, the Harvard University Industrial Economist Council, and Dr. Yun is a nationally recognized expert and leading speaker, appearing regularly on financial news outlets. Truly an honor to have you here with us today, Dr. Yun. We enjoy reading your columns and via email and on the website regularly. And on behalf of the Commercial Board, thank you for joining us. And it's my pleasure to turn it over to Keene Miller, who will share some questions with you. Thank you so much.
Great, happy to be here. And President Jeff, thank you for inviting me to participate.
Absolutely, welcome.
Jeff, thank you very much. We appreciate your leadership during these challenging times for our board. Dr. Yun, thank you so much for taking time out to join us this morning. And welcome everybody, and thank you for participating and supporting the board. Dr. Yun, obviously 2020 is not looking like as we initially had planned. A very strong, robust economy has changed very dramatically, and you know, commercial real estate is an industry that we're in the business of American business, and so the economy and how business develops is of utmost importance to us. So, would like your thoughts on how you see the rest of 2020 playing out economically and business and for the industry.
You know, back in February, so before the pandemic shutdown, I remember Goldman Sachs coming out with their updated economic forecast, which essentially say that U.S. economy is recession-proof. Nothing is there to derail the U.S. economic growth. Consumers are very strong, record low unemployment rate, business profit situation very healthy, and of course, quickly everything changed and this is a government-imposed lockdown. So there are several components to this. First, related to Georgia, you know, the governor made the decision, which I think the national press were wondering whether or not it is the right decision or not. Now, essentially, all 50 states are following that lead in terms of reopening the economy. So as the economy is steadily reopening, you are seeing some business transactions which had been completely shut down. Even restaurants, you know, complete 100% shut down in the first few weeks, now down maybe 60%. It's not a pretty picture, but it's no longer 100% down as people are doing social distancing, either sitting or in most cases, takeout orders. So the second quarter numbers will be absolutely awful in terms of everything economy. GDP contraction of maybe 30 or 35%, unheard of contraction. The job losses that was already experienced of 20 million job losses. The key question is, what happens in the third and fourth quarter? Certainly it will be a growth because the governors have reopened the economy. So we know that some sectors where it had been artificially shut down, for example, dental offices, or say people who needed hip surgery replacement. Believe it or not, through COVID-19 crisis, there were fewer nurses working, fewer doctors working. There were actually layoffs, furloughed, because they said they need to save the hospital beds for potential COVID-19. But now we know that people need those surgeries, need to visit daycare centers, So many industry will be coming back. So there will be growth in the second half. It's unclear how strong or how long it will take us to get us back to normal. My best guess at the moment is that overall GDP in 2020 will be down about 4 to 5%, even with the second half recovery, which translates into about 4 or 5 million net job losses for the year as a whole. So we know there was 20 million job losses, which means that there would be about 15 million job creation in the second half of the year.
And on the subject of the return, and the state of Georgia was one of the first states to reopen. And as an example, here at Ackerman, we have reopened our office, although not requiring people to come in, but still, as you come into work, a lot of businesses are working remotely. And obviously the service sector is a big part of the economy, and that is office space. Can you give some thoughts on what impact near term and also long term in terms of the office sector would be, with a lot of people still working remotely, and will this affect things long term in terms of office use?
So Dr. Fauci over the weekend, interestingly, said that he believes, in his opinion, that vaccine will be discovered by the year end, based on like dozen companies competing to discover the vaccine, all different methodology. So if vaccine is discovered, we are pretty much back to normal in terms of the lockdown to full economic opening. Even the cruise ship industry may be completely back on normal if the vaccine is discovered. One permanent change that has occurred from this pandemic phase, which is this Zoom video conferencing calls. I did not know about Zoom before, but now we are using it. I'm doing Zoom call maybe 3 to 5 times each day. People are becoming very comfortable. We have heard Twitter essentially saying people can work from home forever. And Facebook also announcing essentially voluntary option to come into the office, actual physical office space. Most companies, I think that still visiting offices is important, but maybe less everyday use, meaning that the employers will offer more flexibility. So there could be some steady shrinkage of office demand needs, or maybe if there's a job growth, say in 2021, that the demand for office space do not commensurately rise, as companies are essentially saying, well, now you can work half of the time at home. So this will fundamentally change the office market dynamics. Now, fortunately, there has not been an overbuilding of office spaces in recent years, and the vacancy rate had gone down. I don't see companies suddenly deciding to say, okay, I'm going to completely vacate out of the office spaces. So it could hold steady. I think the rent issue is a very difficult situation where the tenants, are they able to pay the rent, especially in the retail sector? But fortunately in the office market, most tenants are still paying rents because many industries are up and running using video conferencing. But that's something to think about. Now, Atlanta is uniquely placed because you have the downtown center, but also many suburban office locations, because parking spaces will become more important. Now, people were always thinking about maybe we don't need parking spaces. Well, we are finding out that if there is a next pandemic, people certainly do not want to take the public transport or even use taxi or Uber. People want to drive, which means taxi becomes, I should say, the parking spaces become ever more important.
Thank you for that. Moving to retail, which you'd alluded to earlier, with retail in almost a complete shutdown other than some mission critical elements. And I noticed that Georgia was very high in jobs loss. And I was wondering whether that's an indicator that we've got a very high level of retail in Atlanta, and maybe that had some effect on what Georgia's job losses look like. Can you comment on the retail sector and what impact this may have ultimately on the retail area, especially with Atlanta and Georgia being heavily retail focused?
Well, when Jeff invited me for this session, as I was thinking about Atlanta Commercial Board, I said, good news, bad news. Well, the good news is Atlanta market over the long term, very bright, optimistic. Atlanta market is very solid. The bad news is that it's on commercial real estate, which will take a little harder hit compared to the residential housing sector. Residential housing is more dependent upon mortgage rates. Mortgage rates being so low is helping revive the housing sector. Commercial real estate is dependent upon the economy. So I will say that when I looked at the most recent unemployment insurance claim for the state of Georgia, it is high, but interestingly, the number of people who are finding jobs in today's environment appears to be a little higher than people who are filing for unemployment insurance for the very first time in Atlanta region. So you may have actually reached the crossover point, which is one of the first in the country, more job creation than job losses that's occurring. How do I know that? Well, you look at the people who are filing for unemployment insurance for the very first time. So it spiked in mid-March, then it steadily diminished. And then you look at something called who are currently receiving unemployment checks. So that will be the cumulative total of that number. And the number in the past week is actually lower than the prior week, which means that people are finding jobs as, say, FedEx, Walmart, Amazon, and with the economy reopening, maybe some companies are rehiring or people who are furloughed to say, come back to work. So I think Georgia may have actually turned a corner in terms of the job. Now, it's not back to normal by any means, 15% unemployment rate, so it's still a long way to go. But the retail sector had been already weak before the pandemic because of the shift towards online shopping. People working in the industrial warehousing sector, they've been smiling, the property prices rising strongly, but not the case on the retail. It is at the expense of the retail sector. So it's gonna be tough. Even as one looks at a restaurant, their favorite restaurant may be permanently closed, and that is a sad event. But one also have to think about the entrepreneurship of America, that retail space, restaurant space that is vacated. 1 year from now, I guarantee there will be another entrepreneur starting a restaurant business right at that location 1 year from now. So in a sense, with the vaccine discovery, there will be some dynamism, meaning that some, unfortunately, because of the cash flow issue, they may not survive. But I think the new entrepreneur will want to take advantage. But in the meantime, the property prices on the retail sector, I think it's gonna take a little dip and trying to find the tenants. It will take a little time apart, but the online shopping just simply accelerated during this pandemic. And I think that's another permanent change, people becoming much more comfortable shopping online rather than through foot traffic.
Thank you for that. And that's some encouraging news in terms of maybe the tipping point from employment here in Georgia. And I share your view of America's entrepreneurial spirit and ability to come back. You alluded to the direction of shopping in industrial, and clearly that's been a big contributing factor in the drive of the industrial market. And that looks a very different picture, at least from where we at Ackerman sit. In terms of how industrial is doing. Can you comment a little bit on the industrial sector? Because obviously a number of industrial distribution companies are booming during this period of time. Do you see that?
Yeah, that's one sector that is booming, along with, say, data centers and storage units. So the industrial sector, I think, overall trend, which has been for the past 5 years, we have seen that in terms of people's retail shopping patterns. It's been rising about roughly 3 times as fast in terms of the percentage growth rate compared to the brick and mortar stores. And we take survey of SIOR members. Those are people who specialize in industrial and office spaces, and people who specifically specialize in industrial sectors. I mean, they have consistently said market is performing very well. So we created an index, and it's consistently outperforming. And I think the situation is very bright. And furthermore, with the Panama Canal zone or widen, you see more shipping, international shipping, rather than go to the West Coast, LA, or say Seattle. It's actually going through the Panama Canal and coming to Savannah or Charleston, and then being shipped straight to Atlanta. And therefore, I think that there's more busy port activity that one can anticipate. And in Georgia, very business friendly. All the resumption of the international trade after the pandemic phase, I think just matter of going through this pandemic phase for the industrial, but it has remained very strong for the industrial sector.
Thank you for that. And in terms of location, commercial real estate and real estate in general has always been location, location, location. And with potentially a movement toward more working remotely, or at least less frequent working at the office or whatever facility you're in, does this change the dynamic that location is the biggest driver in real estate decision making, or it becomes at least a different percentage of the equation and brings the return to other locations that maybe were not as favorable in the past because of traffic congestion, accessibility? Does that change that dynamic to some degree? Because certainly here in Atlanta right now, you can get, used to be a 30-minute city. In the best of times, maybe it's a 15-minute city right now with the reduction in traffic.
So that permanent change of more people able to work from home. And I think what that will mean is that some people will want to change residence. Maybe they were living in a condominium, now say, well, I need to have a little elbow room, certainly a dedicated office space at home. So maybe they want to live out in the suburbs. Now the trade-off before the pandemic is you live in the suburb, but the traffic jam in Atlanta, nightmarish. But if people can try to locate specifically because you have all those mini job centers. One criticism of Atlanta from outsiders' perspective was it's not a downtown employment. It's just spread all over Atlanta. But post-pandemic, it may actually be a better situation because now people can live in, say, Sandy Springs. I don't know all the specific area, Buckhead and so forth. But now people can live more closer to their job center, not having to worry about the traffic patterns. So you may actually benefit Atlanta in that sense, that traffic jam was one constraint to potential further growth in the Atlanta market. But if people can work more remotely and they can live out further out into the suburbs, then the traffic becomes a less of an issue and less of a constraint for the growth in the Atlanta market.
Interesting. Thank you. In terms of long-term prospects, obviously there has been a lot of difficult, challenging, unsettling news in the near term here. Can you give us, as a final question before we open it up to questions from participants, some tidbits of positive ideas, news, thoughts on the future?
So the unemployment situation we know is tough. I always say, the hardest work is people who are unemployed trying to find a job. Those are one of the hardest time for people who want to get back to work. But the massive stimulus bill that we have put into place is that people who are currently unemployed, we've been running some numbers, and in the state of Georgia, the unemployment insurance check roughly matches the wages they are lost. So at least there is an income support, even though they may not have the job temporarily. So at least temporarily, the income support is, on average, replacing the wages lost from working in the state of Georgia. So at least people have income support. We are finding that the bank deposit is rising, which means that what are people doing with the unemployment check or stimulus check? Well, you cannot go see Atlanta Braves, you cannot go to many places, especially during the lockdown. Now you are reopening, so maybe people have saved that money waiting for the full recovery or full opening of the economy to spend that money into the economy. So maybe even like more durable purchases like vehicle purchases may begin to come back strongly. Housing sector, interestingly, just as a confidence measure, is coming back quite solidly, even though that is a very expensive purchase driven by low interest rates. So 70% of the people with secure employment, they are just waiting when the economy opens to spend. The other 30% with either not having a job or unsecured employment, at least they are saving the cash and they're ready to unleash that spending into the economy. Just one little thought on by innovation is that the shopping malls, which again was under pressure before the pandemic, now completely even more under pressure now, is for some shopping malls where you see is not going to survive. Maybe there's an opportunity for commercial developers to talk to the local officials, or because there will be some federal infrastructure spending in the future where money will be distributed to the states to see whether or not they can convert shopping mall into a healthcare armory. That is to say that if there is a next pandemic, that shopping mall is already set up to produce masks, produce ventilators, and maybe even have a space for extra hospital beds. So just making into a sort of healthcare armory. So in case there is a next pandemic, is ready to go and is strategically located where people can easily drive into the shopping, this empty shopping mall, or I should say the healthcare armory. So maybe there's a development opportunity for some commercial entrepreneurs to think about this concept and talk to the local public officials to see what they can do about that.
Great, thank you very much for that. Jeff, do you have some questions from the participants that you'd like to share and ask Dr. Young?
Yes. Okay, I think I'm back. Thank you for all that great info so far. Share a few questions with you. How do you foresee banking or lenders underwriting change when they're looking at facilitating new loans in this current environment? Is it going to be more challenging to get financing for commercial deals?
I believe so, because what we are finding is that from the lender's perspective, everything they're lending out is ones that can be sold to the government agencies. On the residential mortgages, if it can be sold to Fannie and Freddie, they are originating those mortgages. If they cannot, like jumbo mortgages, is a very high credit standards, 40% down payment, pristine credit, which then I would say would be for most commercial real estate loans. Now, for multifamily apartment development, you may be able to sell it to Fannie and Freddie, and then that loan could be available. And I also see that the demand for the apartments, which has been very strong, to continue to remain strong. There could be some shift towards single family rentals as people want to move out of the multifamily household situation. But anytime you have a more difficult economic challenges, it always boosts the demand for apartment rentals.
Okay. Here's an easy one. What is the impact of the election as it relates to Georgia commercial real estate, the national presidential election?
Well, yeah, that's an easy question. My mother always said, talk about religion and politics wherever I go. But irrespective of the election, I think will have consequences. Certainly, President Trump can be quite divisive in his commentary, but one looks at the records of what the tax cut, deregulation. In fact, NAR, we always invite the sitting presidents to address the realtor audience when we have our annual meeting in Washington each May. So this time last year, President Trump came and spoke, and he talked about all the economic numbers, record high stock market, record low unemployment conditions. And so, the economy was, again, doing very, very well. Now, Joe Biden, he is more moderate wing of the Democratic Party compared to, say, certainly Bernie Sanders, who I think would have been very devastating for the business community. So we have to wait and see how that goes. But on the election outcome, generally what we find is Washington, D.C. area, you see some impact as to when there is a party shift. But for the rest of the economy, it's really about the momentum. And the momentum factor, certainly in Atlanta, I think it will be one of the first to recover because he reopened. assuming that it was safely reopened without the second outbreak of the virus, or maybe a vaccine is discovered. So I think it's that momentum factor that will be far more important than the presidential election.
Okay. Do you care to make a prediction on where the stock market will close at the end of the year?
I am quite surprised about how fast stock market recovered up to yesterday. I know today it is down, but up to yesterday, given the unemployment situation, given the uncertainty about whether we will have a V-shaped recovery or U-shaped recovery, to the degree that people say stock market, if anything, is the ultimate leading indicator for the economy. I mean, it just zoomed, and I believe NASDAQ is actually up compared to 1 year before. So this is as people are betting money on the US economy, they are betting that it's gonna be V-shaped recovery. So I will not make projection on whether the stock market will settle by the year end, but I'm quite surprised about how fast it had recovered.
Excellent. All right, last question. You talked a little bit about the office space world in terms of where people may locate in proximity to residential and the option for potentially more teleworking. Have you, at NAR or through your other research, started tracking if the utilization within people's current space is going to change? So, you know, the same company may occupy larger cubicles instead of smaller cubicles in less dense areas. Are you all tracking that from any perspective?
It's too early. So I think, right now it's just work at home pretty much in most part. At NAR specifically, DC is locked down, so we simply cannot open. But even if DC was to open, we are wondering when we will get back into office, because right now we're doing all productivity from home because we are a service related industry. And therefore, I think the key issue is that even with social distancing, which means you need a larger office spaces or at least every other cubicle. So, but that is only temporary measure. Once the vaccine is discovered, again, everything is back to normal. So there could be some temporary issues about maybe you only bring half of the workforce into office or stagger time release. People leave. Come to work at 7 a.m. to 3, others 8 to 4, and so forth. So stagger schedules to avoid crowd. But these are only temporary measure until the vaccine is discovered. And assuming Dr. Fauci, his prediction is correct that we're going to get vaccine by the year end, I'm not sure how many companies will want to have additional office spaces rental just to get that extra social distancing.
Yeah. Okay. Well, once again, on behalf of all of the commercial board members and our leadership team and our staff, thank you so much, Dr. Yoon, for joining us. Keen, thank you very much for moderating. Great job. And once again, we'd like to thank our annual sponsors and our education sponsors. We hope you have a productive week, and we look forward to connecting with you all again soon. Thank you very much, Dr. Yoon. Thanks, Keen.
Yeah, thank you.
Thank you, everybody. Take care.
Everybody take care. Bye-bye.